Welcome back to the channel, guys. Welcome back to the channel. Welcome back to the channel. This is Seventh Profit, and I'll be your host, your tutor, and your friend. This is going to be the second segment for the video. I've released the first segment, which is mastering cryptocurrency trading with Bybit, right? So this is the second part of this video. So uh, I'll be making use of this as a reference, right? I'll be making use of my note here as a reference. So that I won't get lost between lines, right? So let's proceed. So now, today we are diving into Bybit, right? I'm gonna explain how to trade like a professional, even if you are just starting out or you are still figuring out what all these buttons do, right? I'm going to explain everything for you in this video. Uh Before I proceed, kindly know that all what I will be explaining in this video can be used on all other centralized exchanges. You can use you can use this method, you can use it on Binance, on Bitget, on Wix and the likes, right? So it's not limited to Bybit alone. So grab a snack and let's go step by step through everything from placing your first trade to managing your risks like a boss, right? So let's do this. Uh the first thing on my list is, let me check, let me check. How to place trade on Bybit, right? That's the first thing on the list, how to place trade on Bybit. Alright, first thing first, placing trade. When you open your Bybit, as you can see, this is the interface. I'm going to be making use of a demo account for the sake of this tutorial, right? I'll be making use of a demo account because I want you guys to get everything. I'll be placing trades on this demo so that you see how everything is going on, right? So when you open Bybit, you will see the on the left we have the chart. This is what I mean. On the left we have the chart, and on the right we have trade, right? We have trade. So but before we rush in, right? Before we rush in, I want you to take note of something. Here we have what? BTC USDT. That is the trade we want to work with. Any pair you have above there is the pair you want to trade, right? That's the pair you want to trade. If you want to change it, just click on it. Just click on it right there. If you click on it like this, then all other crypto you want to change will be listed here for you, right? Will be listed here for you. And if you check above here, we have all, right? We have trending coins that are trending. Then we have new, we have the one that uh they've not listed them pre, we have mem, we have innovation, and we have what? SOL Echo. All those things you don't really need them. What you really need is if you check at the top here, if you check at the top here, you see we have USDT, right? USDT. And if you check above here, we have what? Perpetual contract, right? Perpetual contract. So here now, this is the price of one Bitcoin, right? BTC USDT. BTC USDT. So one BTC will cost what? 103,175.00. And in the last 24 hours, it has reduced by 0.06%, right? This 24 hours right here. So it has reduced by what? 0.06% in the last 24 hours. Now, don't get yourself confused with, in the first video I explained what spot is, the difference between what spot and perpetual, right? So if you don't know the difference between spot and perpetual, kindly go and watch the first video I dropped, right? Kindly go and watch the first video so that you have a better understanding. So now the major difference between spot and perpetual, so that you won't get confused. When you check here, you can see we have BTC slash USDT, right? BTC slash USDT. Whenever you see where they put that slash, that means you are trading spot, right? You are trading spot. For perpetual, for perpetual, there is no slash, right? For perpetual, there is no slash. This is actually where uh this is what we have business with, which is what perpetual contract. We are not trading spot, right? So let's say we want to trade BTC USDT. So just click on the BTC USDT. As you can see, it brings us to the chart, right? It brings us to the chart. Now, when you click on, by the left we have chart, right? And by the right we have trade, right? So I click on trade. When I click on trade, now what do you see? Firstly, we have what? The coin we want to trade with. That is at the top, right? The coin we want to trade with. Then we have what? The the margin, right? We have the margin. So first thing first, first thing first, let me explain to you the Bybit order type. Please, I want you to follow me carefully on this video so that you don't get lost along the way, right? So the first thing I will talk about is the Bybit order types. What are order types? These the order types. Here are they. We click on that market, a drop down. We have what? We have limit, we have market, and we have conditional, right? That's the that's the most important one you need to focus on, right? Limit, market, and conditional. That's the three main order type you need to know, right? So let me explain market order first, right? Let me explain this first. Market order. Let me explain it. So market order, when you say market order, you are saying just like I want to buy a particular coin right now. I don't want any delay. I want to buy instantly. So just get me in now. So it buys or sell at the current price fast, but might not be the best price, right? But you are buying immediately, right? You are buying immediately. Now, what about limit? Limit versus what? Conditional order, right? Limit versus what? Conditional order, right? These two. Now, when you place a limit order on Bybit, remember I'm explaining this now. I'm explaining this. When you place a limit order on Bybit, you are telling the system, I want to buy or sell only at this exact price. I want to buy or sell only at this exact price. You are buying at your own price, not at what uh, people are selling or buying. You are buying at your own price. So, for example, now if Bitcoin is at let me say $30,000, and you place a buy limit at 29,000, your order will only execute if the price drop down to 29,000 or lower. You understand? So a limit buy order is always set below the current price, and a limit sell order is set above the current price. I hope you understand. So here is the catch. You can't use limit order to buy above the current price or sell below it. That means you cannot place a buy stop or sell stop with limit order on Bybit. You understand what I'm saying now? Let me explain to you again. You know we have chart. This is currently the BTC price on the 15-minute time frame. This is the time frame, right? And here is the chart I'm watching, right? Now, let's say BTC is currently valued at what? 102,951, the floating price as you can see. Let's say I want to buy when it only comes down to what? 102.05. Here is what I'm saying. Let's say I want to buy when the BTC gets in, that's only where I want to buy. right? So when you set or limit order by what? Clicking this plus button, you will see a plus button at that side is a small plus button circle, right? So just click on that plus button. When you click on it, then a quick order will pops up, right? A quick order will pops up. You can make use of this quick order. You can copy the price, copy, right? You can place your trade here, or at the same time, you can click on what? Long. You can click on this long right here, right? Click on long. Then you change from limit, you change from market to limit, then you the price you copied, you paste it. Why is it not pasting? Okay, no, the limit order USDT 5x level. Let me go back to chart, sorry. 102, 106.94, 102, 102, 106, 102, 106.94. Okay, that means I cannot paste. You can't paste something here, right? You can't paste something. You have to type it manually, right? You have to type it manually. So I was saying, we have a current Bitcoin price right here. This is the current floating price, and I want to use a limit order that okay, I want to only buy when the price comes down. When the price comes down right here, right? Let's say somewhere around here. That's the that's when you are interested to buy, which is what 102,048.76, right? Then you click on trade, you click on trade, right? You click on trade. When you click on trade, you input the value here, right? You input the value here. Then you select, make sure you select your limits, right? Don't forget you select your limits. Then you click on what? You click on long. Then you click on confirm right here. You click on confirm. Then your order will be placed, right? You can see this is your order. It has not yet been filled. Why? Because it's a limit order. Until when market comes down here, that's when it will be filled. I hope you understand. Now, what am I saying? Let me cancel the order. Cancel. So now the next one, I said this is the current price of what? This is the current price of BTC, right? Let's say whenever the market gets here, the market comes up here, that's when I'm interested to buy. How do I do that? That's when you need what? Conditional order, right? That's when you need conditional order. Conditional order is basically buy stop and sell stop, right? BTC is currently pricing at this range, right? And I only interested in buying if it comes up here. If the price rise to about 103,852.20, that's only where I want to buy. I can't use limit order for this. I can only use what? Conditional limit order. I hope you understand. So you can't use limit order to buy above the current price or sell below it. What am I saying? In the same vein, when BTC is BTC is pricing at what? 102,890, right? The floating price. Let's now say, okay, I'm only interested in selling when it come back to what? When the price gets here to about 102,110.82. This is the only time I'm interested in selling. I can't use limit order. I can only use what? Conditional limit order, which is what? Sell stop. I hope you are getting me now. So you can't use limit order to buy above the current price or sell below it. That means you cannot place a buy stop or sell stop with limit orders on Bybit, right? So that's where your conditional orders comes in. Where is your conditional orders? Click on this limit, then change it to what? Conditional order, right? This is where you can, you know, buy. This is where you can place your buy stop and sell stop. Okay. So what do I mean by buy stop? Buy stop is when you set a price above the current market price. When the price rises and hit the level, your buy order is triggered. It's like saying, okay, I want to buy only if the price is going up past this point. You understand? Now, what is a sell stop? You set a price below the current market price. When the price falls and hit that level, your sell order is triggered. So it's like you saying, okay, I want to sell only if the price is dropping past this point, right? Just like example I cited earlier. So if the price hit this level, then what? Place my order. For example, now you want to buy Bitcoin only when it goes above what? It goes above 10, let's say 104. That's the only time you are interested in buying. And it's currently pricing at 102, and you want to buy at what? 104. You can't use limit order for this. You can only use what? Buy stop. What is a buy stop? A buy stop is when you set a price above the current market price. I hope you understand. So now that is that for what? Conditional and what? I've explained limit order, I've explained market, and I've explained what? Conditional order, right? So let's place a real-time conditional order. So a conditional order, we have something called trigger price, right? You set a trigger price. When you want to place a conditional order, you set a trigger price, right? Let's say I want to I want to buy BTC when BTC comes to what? 104,000, right? 104,000 US dollar. That's the only time I'm interested in buying BTC. So you come here, you put your uh your trigger price. Your trigger price can be 103,999, right? That's your trigger price. Then you set your limit to what? 104,000. Then your order value. I will explain this order value later, right? So your trigger price is 103,999, right? While your while your price will be what? 104, 104K, right? Now what is this trigger price? So what is trigger price? Okay, think of a trigger price as your alarm clock for your trade. So if the price point you choose say that okay, hey Bybit, when the price reaches this level, please place my order. It's like setting a reminder to act only when the market moves to your desired price, right? So for conditional orders, the trade only happens once the market hits the trigger price. Until then, your order is just waiting like a sleeping alarm clock. You understand now? Now, why is this trigger price, this particular trigger price why exactly is it important? Why exactly is it important? The trigger price tells Bybit when to start your order. Okay, so the market price is how much your order will cost or earn when it's executed. I hope you are following me now. So you put your trigger price here, then your price that you want to buy, your limit price, and what you put your order value right here. Then you click on long. Okay, then you click on confirm. You can see this is our order right here. This is our order right here. So that's how to place a what conditional limit order. Remember, conditional is same thing as what buy stop or sell stop, right? Buy stop or sell stop. So what exactly is order value? The order value we have here. What exactly is order value? And I want you to know this quantity too, right? So order value is the total value of your position. So if you want to calculate your order value equals to what? Price multiplied by quantity. The price you are seeing here, the price you are seeing here multiplied by what? Quantity is going to give you what? Order value. I hope you are getting me now. The price you are seeing here, the price you are seeing here, right? Multiply by what? Multiply by quantity is going to give you what? It's going to give us order value. Okay? So now let's use another coin for example. Let's use Ripple. Yeah, let's use Ripple. And let's use market order, right? So remember I said what? Order value. Order value is what? The price multiply by what? Multiply by quantity is going to give us what? Order value. Now let's say I want to trade 10 worth of Ripple, right? 10 worth of Ripple. And one Ripple is what? 2.44, right? One Ripple is 2.44 and I want to trade 10. That's about 11 USD, right? Oh, 11 USD is for quantity. So let me increase it. 20 is 8, 25 is 10, right? I want to trade 10 quantity of Ripple. Remember I said the price multiplied by what? Multiplied by quantity. Price multiplied by quantity will give us what? Will give us the order value. So when you multiply 2.44 multiply by 10 is going to give us what? It's going to give us 25. 2.44. Let me see if I have a calculator here. For Let me see if I have a calculator here. 2.44 multiplied by 25. Is it 25? 2.44 multiplied by 10. Sorry, multiplied by 10. 24.4. As you can see, we have what? But we have what? 25 here. Right? We have 25 here. The slight difference you are seeing, right? Bybit charges trading fees, right? They charges trading fees. So I will explain the trading fees in the later time of this video, right? So they have They charge two fees. The first is what? Bybit trading fees. So this trading fee, Bybit charge them when you open or close a position. This fee slightly reduce your buying power, especially when you are using leverage, right? So another one is the rounding precision. So Bybit uses high decimal precision for crypto quantities. For example, BTC is measured up to 8 decimal places. So when calculating quantities based on your USDT balance and leverage, the result may be rounded down slightly to ensure accuracy and avoid over leveraging. You understand? So that's why we are having what? A slight differences in our prices here. Alright? So then we have what? We have cost here. Cost right here. That cost is the margin. Now what is the margin? The actual money you are dropping to place the trade. This is how much of your own capital is required, right? So not because I put 25 here, they are going to deduct 25 from your available balance. No, okay? They will only deduct uh they will only deduct 4.91 because that's your margin, right? That's your margin. Why are they not deducting this particular 25? Because what? We are making use of what? Leverage. 5x what? Leverage. So 25 divided by 5 is going to give us what? 5, right? It's going to give us 5. But they put what? 4.91. Remember, I said there's going to be what? A slight difference, right? There's going to be a slight difference, right? So I believe you understand what I mean by what? Cost, quantity, order value, and what? And the price now. So let's proceed. But before we proceed, let me just recap what I said earlier. When you want to uh, place a limit order, right? When it comes to limit order, can you buy above current price? No, on limit order. When you want to, when you place a limit order, can you sell below current price? No. Okay. But when you are trading what? Conditional order. When you are trading using conditional order, can you buy above current price? Yes, with trigger price. When you are using trading using conditional order, can you sell below current price? Yes, you can. Okay? So that is the difference between limit and conditional. And what about market price? Market is what? I want to buy immediately. Right? I want to buy immediately. Now, let's move to what? How to use leverage and different margin type. Now, what is leverage? This is leverage up here. That is leverage, right? That is leverage. When you click on it, you see 1x, 2x, 3x, 5x, 10x, 25x, 75x, and you can click on customize. So what? You can make use of this slider, the amount of what? Leverage you want to use. Now, what is leverage? Leverage is like using let me say, using a superhero jetpack, right? So you can control a big trade with a small amount of money. For example, if you are using 5x leverage and you have $20, you can trade like you have $100. You understand? So that is leverage, your buying power, your selling power, right? That is leverage. So, and we have uh two margin type, right? We have two margin type right here. Sorry, we have two margin type right here. You can see if you click on it, we have what? Isolated and cross. Okay, isolated and cross. Now, what is isolated? Isolated simply means only the money in that trade is at risk, right? So passive, there is no any other amount. Like for instance, now we have 4.91 here, right? 4.91. Let me place this trade. Remember, I have $100 point 509 in my account balance, right? Now, when they deduct, after placing the trade, they will deduct what? 4.91. I will be left with what? That's 105.95 point something, sha. So let me place a long trade here so that you can see it. You can see I'm having a balance of what? 95.3381. They only deduct 4.91, not this 25 USDT. Why are they not deducting this 25 USDT? Because what? I'm using what? 5x leverage. 5 divided by 25 is going to give us 5, right? That's how it works. I hope you understand. Now, when you set your margin type to isolated, this isolated right here, when you set your margin type to it, that means you can only lose what? 4.91 or 4.92. The amount you use to enter the trade. You can't use higher than this one or less than this one, right? So that is the max you can lose. But when you set your margin type to cross, when you set it to cross, that means you can use your whole balance to protect the trade, right? It is riskier. You can use all the balance here, all the 25 here. That's how much you are risking for the trade. So when you use isolated, only the money in that trade is at risk, super safe. When you use isolated, only the money here you use to enter the trade is at risk, right? But when you select cross, right? When you select cross, you are using the amount here. You are using the amount here to risk the trade. So you use your whole balance to protect the trade. It is riskier, but can save you from liquidation sometimes. I hope you understand now. Good. Uh so let's move on. Let's move on. Another thing we have is what? Risk to reward ratio. Risk to reward ratio. What exactly is what? Risk to reward ratio. Now this part is key. Let's say you want to risk $5 to make what? $15. Okay, I want to risk $5 to make $15. That's what? 1:3 risk to reward ratio. Meaning what? You are risking 1 to what? To make 3. So it means you only need to win 1 out of 3 trades to be profitable. That's what? Risk to reward ratio. I hope you are getting me now. So let's say you want to risk $5 to make $15. That's a what? 1:3 risk to reward ratio. Let's say you want to risk $5 to make $20. That's what? 1:4 risk to reward ratio. You understand now? Good. So let's move to setting a stop loss, which is what? TP and LSL. This is where they are. TP and LSL. When you check it like that, so you can set your what? TP and LSL here. Take profit and stop loss. So stop loss tells Bybit when to close your trade if it goes in the wrong way, right? So simply put, it tell Bybit, okay, we'll close my trade if it goes the wrong way up to this level. Likewise, take profit. Take profit said, okay, lock in your gains when price hits your goal. You understand? I want to exit my position when I have acquired this particular amount of profit. Or we have what? Break even. What is break even? Break even is similar to stop loss, whereby you move your stop loss to your entry point. Once the trade goes in your favor, right? You move your stop loss to your entry point once the trade goes in your favor. So you can't lose. That's smart trading, right? So let's move to understanding liquidation and how to avoid it. What exactly is liquidation? Liquidation is when you lose all the money, the margin in a trade, right? All the margin in a trade. That's liquidation. Now, remember the other time I said what? I said we are risking what? 4.92. If we select what? If we select isolated, we are risking what? We are risking 4.92. Now when you lose all this 4.92, that means you have been liquidated, right? That means you have been liquidated. So it happens when the market moves too far against you and your margin can't cover the loss. You understand? So when you select when you select cross instead of isolated, that means when you lose all your money here, right? When you lose all your money here, you will be liquidated. You understand now? Please, if you don't get what I'm saying, you can drop a comment. I will be glad to attend to it, right? So, like I said, liquidation happens when the market moves too far against you and your margin can't cover the loss. You'll be liquidated, right? They will exit your position. Oh, guy, you don't have any money again. So to avoid it, that's why what? Use stop losses. Use stop losses. Don't over leverage and don't risk your entire account into one trade, right? Into one trade. That's how to avoid it. So we have on the list what are liquidity, maker fees and what? Taker fees, right? Now let's simplify. Liquidity is how easily something can be bought or sold, right? So that's the simplest definition I know. Liquidity is how easily something can be bought or sold. Now, for example, if Bitcoin has a high liquidity, why? There's a lot of buyers and sellers, so you can buy or sell quickly, right? But a small unknown coin might have low liquidity, so it's harder to buy or sell without waiting. I hope you are getting me now. Let me come again. BTC has high liquidity. Remember I say liquidity is how easily something can be bought or sold, right? Liquidity is how easily something can be bought or sold. So Bitcoin now, for instance, it has a high liquidity. Why? Because there are a lot of buyers and sellers for it, right? So you can buy or sell quickly. Now let's compare it to what? Unknown coin. Unknown coin surely have a low liquidity because it is harder to see a buyer or seller for it without you waiting. That's what? Liquidity. Now let's use Ripple and BTC for instance now. You can see we have what? We have our order book right here. This is our order book. We have our order book right here. You can see how they are moving. They are moving. They are moving in seconds. They are moving in seconds, right? Now let's check for BTC. Let's check for BTC. You can see BTC is moving in what? In nanoseconds. I hope you can see the difference. BTC order book is moving in what? Nanoseconds. The one in red, these are the people that are selling. The one in green, these are the people that are buying. You understand? But when you check Ripple, when you check XRP, you can see the order book is kinda slow. Even though Ripple too, it has a very high liquidity, right? It has a very high liquidity. So that is liquidity. Now I told you the other time that what? Bybit charges a fee. The fees Bybit charge is called what? Maker and taker fees. Now let's talk about the maker fees. What is a maker fee? When you place a limit order that does not fill immediately, right? You know limit now, you are not buying immediately. Market is only when you are buying immediately. Limit, when you place a limit order that does not fill immediately. So, and instead add liquidity to the market, you are a maker. I don't know if you get. Now, I told you earlier that what? Bybit charges maker and taker fee. The first one I'm talking about is maker fee. What is maker fee? When you place a limit order that does not fill immediately, and instead add liquidity to the market, you are a maker. You are adding liquidity to the market, you are a maker. Now, Bybit usually charges a lower fee for makers, sometimes even a small rebate, meaning they pay you a bit. I don't know if you get. Now, example now, maker fee might be minus 0. Let's say minus 0.025%. You actually earn 0.025% of the trade value. I hope you get that point now. Now, what is taker fee? When you place an order that fills immediately by matching someone else's order, like a market order, you are a taker. You are taking from the order book. So Bybit charges a higher fee for takers because you are taking liquidity away from the market. Example now, taker fee might be, let's say, 0.075% of the trade value. How fees are calculated? Let's say you buy $1,000 worth of BTC on Bybit, right? If you are a maker, limit order. Now, this is how you calculate the fee. $1,000 worth of Bitcoin multiplied by what? Minus 0.025% is going to give you what? Zero minus 0.25%. So Bybit pays you this 25 cents. I hope you are getting me now. I'm explaining for you how these fees are calculated. Now, let me come again. Bybit charges a fee. Whenever you place a trade, Bybit charges you a fee. Let me close this trade. Let me show you what I'm talking about. You know, right in my balance, I have what? 100 point what? 1160. Remember that? 1160. I choose my margin to what? Isolated, right? Now I want to trade Ripple. My order value is 25. My order value right here is 25, and quantity is 10, and the cost is what? 4.89 to 4.9, right? This is the cost, 4.89 to 4.9. Now 4.89, you know, in my balance I have what? 100. This is my balance, 100.1160, right? 100.1160 in my balance, 100.1660 minus what is Bybit said it will cost me to place this trade. My margin, my actual capital, 4.89. Let's say 4.89, right? 4.89 minus 4.89. I'm supposed to be left with what? 95.276. Now let's go back. 95.676. Now I place the long trade and I click on confirm. Then I close immediately without losing or gaining. I'm supposed to be left with what? When I close the trade, I'm supposed to be left with what? 100.1160, my initial capital, but I was left with what? 100.1213. This difference, where does it go? Bybit has charged me what? A taker fee, because what? I use a market order. I take liquidity from the market. So they charge me taker fee. You understand? So maker fee, when you place a limit order that does not fill immediately and instead add liquidity to the market, you are a maker. You understand? Let's say, assuming I set a limit order, right? I set a limit order, and my limit order, let's say I want to buy Ripple when it is what? 2.1, right? 2.1. I set my order value and I set my order value and this is the cost, right? This is the cost. And I click on long. I place the trade, right? I place the trade. Remember, this is a limit order. Now, whenever whenever this market is still in the order book, it has not been filled yet. Why? Because price has not reached 2.1. Until XRP reaches 2.1, that's the only time when the market will be filled. You understand? So if eventually this market gets filled, it gets filled using a limit order, right? It gets filled using a limit order. Now, the Bybit will charge me a lower fee. What is this lower fee called? It is called what? A maker fee. Why? Because what? I add liquidity to the market. But when I place trade using what? When I place trade using uh when I place trade using a market order, Bybit is going to charge me what? A taker fee. Again, what is a maker fee and what is a taker fee? A maker fee, when you place a limit order that does not fill immediately and instead add liquidity to market, you are a maker, right? Bybit usually charge a lower fee for makers, sometimes even a small rebate, meaning they pay you a bit. You understand? They will pay you a bit sometimes. So what is taker fee? Taker fee means when you place an order that fills immediately by matching someone else's order, like a market order, you are a taker. You understand? So Bybit charges a higher fee for takers because you are taking liquidity away from the market. Now, how is this fused? How is it calculated? Right? How is it calculated? Let's say taker fee is what? 0.075% for taker fee of the trade value. Right? Let's say we are what? We are we are buying $25, 25 worth of USDT, right? 25 worth of Ripple, $25 worth of Ripple XRP, right? XRP, right? So if you are a maker, like you are using this using what? Limit order. That means you are a maker, right? Because of the limit order. Now this fee is going to be 21. Let's say our 21, this is the price, 2.1. Order value is 21. Let's just assume, or let's say 25, the order value. So I want to show you how these fees are calculated. Now, this fees equals what? This $25, this order value here, the 25 multiplied by what? Minus 0.025%, right? Minus 0.025%. What is this minus 0.025%? It's just an absorption uh of the maker fee that Bybit charge. So when you multiply 25 multiplied by minus 0.025, it's going to give you what? Minus 0.25. So Bybit is going to pay you minus 0.25%. You will be paid. You understand? Because we are using what? Limit order. Let's say you are a taker. You change this limit, you change this to market. That means what? You want to take something out from the order book, right? Because you are using what? Market order. That means, and your order value is also 25. Remember I told you that what? They charge higher when it comes to what? taker, when you want to take liquidity from the order book, Bybit charges higher. So let's assume the charge is 0.075%, right? It's going to be 25 multiplied by 0.075% equals to what? 0.75. So you pay 75 cents for taking liquidity from the order book. So why does it even matter? If you want to know the exact price, that the exact price, exact maker and taker fee, so you can search online, you will see the uh maker and taker fee that Bybit charges, right? So why does this even matter? Using limit order maker can save you money or even earn you small reward. You understand? But if you are using market orders, like you are taking liquidity from the order book, it what? It gives you faster execution but cost more fees. Remember, this is our order book. This is our order book right here. This is our order book. The red, people selling, the green, people buying. You understand now? Good. Now let's move on. Understanding funding rates and their effect on your position. What exactly are funding rates? If you look up here, you see what? Funding rates. And there's a countdown timer there. Now what exactly is what? A funding rate. Funding rate happen every 8 hours on Bybit. Every 8 hours. You can see that countdown timer is 8 hours. When it elapses, another 8 hours will start. Now if the funding rate is positive, as you can see in this example now, in this scenario, it is negative. Let's say the funding rate is positive. If the funding rate is positive, they will remove the negative sign, right? They will remove the negative sign, right? Let's say the funding rate is positive and you are in a long position, right? Let's say we enter this market, I long this trade, I'm in a long position, right? I'm currently in a long position, and the funding rate, this countdown timer for the funding rate reaches zero. Immediately it reaches zero, and this one is what? Is positive. You will pay a small fee to traders who are shorting. I don't know if you get what I'm saying. What am I saying? Let me repeat myself. Now, we have a countdown timer here, and we have what? We have the funding rate here. This is what? Negative funding rate. Let's say you are in a long position, just like in this example, you can see I'm in a long position for Ripple, right? I'm in a long position, and we have the funding rate is negative. Now, if the funding rate is positive, let's say it is positive and I'm in a long position, I will pay a small fee to traders who are shorting, right? But if the funding rate is negative, just like in this example, and I am shorting, right? The funding rate is negative and I am on short position, I might get paid. Who are the people that will pay me? The traders who are on long. You understand now? Funding rate happen every 8 hours on Bybit. If the funding rate is positive and you are long, you pay a small fee to traders who are shorting. If the funding rate is negative and you are short, you might get paid by traders who are long. You understand? So this system help keep the market balance. So there aren't too many buyers or sellers pushing the price too far. You understand now? Now, how is the funding rate calculated? It is based on two things. The first is the interest rate, right? So a fixed percentage usually small, reflecting the cost of holding the position overnight. Another one is premium index. This show whether the perpetual contract price is above or below the spot price. You understand? So if the contract price is higher than the spot price, funding rate is positive. Long pay short. If the contract price is lower than the spot price, funding rate is negative. Short pays long. For instance now, funding rate is what? Zero positive 0.01% every 8 hours. You hold a long position. Your order value worth what? $25. So after 8 hours, you pay that 25 multiply by what? Is 0.01%. So the answers, that's the amount you are paying to short, to the traders that are shorting. I don't know if you understand what I'm saying. So always check the funding rate before opening a big trade, because it can add up over time. You understand now? So that is for funding rate. So another one on the list is what? Let me check. I talk about funding rate. Okay, three type of traders you meet. Three type of traders you meet. Let me say, in trading, firstly we have the people that gamble, the gamblers. These people have no strategy. They just vibe. Usually losses a lot, you understand? That's the first type of trader. We call them the gamblers. They don't know what they are doing, no clear entry. They have no reasons why they enter a market. They just gamble it. So the other trader is the paper trader. They practice without real money. They are always using demo. You understand? So smart move for beginners. So you start with what? Demo. And we have the other type of trader, the risk manager. They calculate entry, stop and risks, right? So usually wins long term. You understand? So these are risk manager. So please be like the third one, a risk manager. Not be a gambler. Then if you are a beginner, use a paper trader, right? Use a paper trader. And the last one is what? Risk management and trading psychology. This is the how do I say it? Let me say this is the secret sauce, right? So the thing is that when it comes to risk management and trading psychology, don't trade just because you are bored, right? So because you are bored, you want to place a trade. No, you don't do like that, okay? So another one is what? Set a risk limit. Like never losing more than 2 to 3% per trade, right? 2 to 3% per trade. Let's say you have $100 in your Bybit, $100. Make sure you are using what? Isolated first. Then what? Your cost. This is the actual amount. This cost you see is the actual amount they will deduct from your balance. So per trade, make sure you are risking what? 2 to 3%. That's 2 to 3% of $100 is 3. So make sure that what? The amount that will be here is not exceeding what? 3%. That's how you can stay long in the market. That's how you can stay long as a trader. And don't ever try to revenge a trade. Okay? When you lose a trade, take a break. Don't try to revenge a trade. Then stay calm. Always stay calm. Don't chase green candles and red drop. You understand? Because there are some people, they will say, okay, because this candle now, it has turned green. Oh, let me long. Oh, it has turned red. Let me dump. Okay? Don't chase green candles and red drop. Alright? So when it comes to risk management and trading psychology, please don't trade because you are bored. Set a risk limit. Like never losing more than 2 to 3%. 3% highest per trade. So don't revenge a trade. Take a break when you lose, like I said earlier. Then stay calm. Do not chase green candles and red dumps. You understand? So trading is like a video game. It could headwind in the end. You understand now? So that is it, guys. Let me quickly do a recap of what I've been saying all this while. Let me close this trade, right? Let me close this trade. So I talk about isolated, right? I talk about isolated. What is isolated and what is cross? If you click here, right, we have isolated and we have cross. Cross is what? When you select cross, that means you are using the amount in your order value. That's the amount you are risking when you select cross. But when you select what? When you select isolated, when isolated is selected, you are risking the cost, the amount here. That's how much you are risking per trade. What is cost? Cost is your margin. You understand now between isolated and cross, right? So, and I've explained leverage for you guys. I've explained leverage. So let's quickly place a trade. I want to show you guys how to calculate your liquidation price. So let's say I send a screenshot to the group chat, how to interpret it. Okay, something like this screenshot now. You can see this is Ripple USDT, right? This is Ripple USDT. And if you check this screenshot, we have some values here, right? This is a short position. You see this red figure dey write here, that is what? That is a stop loss. You see this green, that is what? Your take profit. And you see the value that is grayed out here, this value that is grayed out here is your what? Entry. So if someone sent you this screenshot, this trade, and you want to place it, now remember I said this is your entry price, 2.5027, right? I'm not sure if you can see it, 2.5027, right? Then you go to your Bybit. Remember it is limit, right? It is limit. And the price is what? 2.5056. If I have not forgotten, 2.5027, sorry, 2.5027, 2.5027. That's the price. Then the other value. Let's select our TP and SL first. Remember the one written in red is what? Is our SL, 2.5332. That's our SL, 2.5332. And our take profit, let's check it. Our take profit is what? 2.4134. 2.4134. 2.4134, right? And you see this one, here, this particular one, that's the current price of Ripple as at the time they took this screenshot. You understand? You can see a countdown timer beneath the value. So that's the price of Ripple at the time they screenshot this picture. You understand now? So remember, this is what? Stop loss written in red. This is the entry price and what? This is your take profit. You understand? Good. So let me go back to Bybit. We have placed our order, we set all our values. Then remain the what? Other values. What is an order value? Order value is the what? Total value of your position. You are in control of that one. So let's just put, since the value of Ripple is valued at what? 2.4. I can say, okay, let me buy about 10. So put 2.4 multiplied by 10, that's about, let's put 25 first. So 25 is about 10 to 9 ripple. So let's put 26, right? This is where I'm checking the quantity. The quantity is right here, 10 ripple. This is the quantity here. You understand? So I'm controlling 10 ripple, right? And the cost they will deduct, the exact cost they will deduct from my $100 is what? 4.91 to what? 5.03 USDT, right? Remember, I'm having available balance of 100.0745, right? So the amount they will deduct is what? 4.9 to what? 5.03. You understand now? So let me place the trade. The potential issue may come with this order. Continue to place order. Okay, 2.5027. Let's check the current price of BTC. The current price of Ripple is 2.4 now, and the person said we should enter at what? 2.5. That's a what? That's a what? Buy stop. You understand now? We want to enter at what? About what? 2.5. Let me check the image very well. Oh, sorry, we are shorting, not longing, right? We are shorting, not longing. Remember, we are shorting, not longing. How do I know we are shorting, not long? Because you can see this is green and this is red, right? This is green, this is red. Red is on top and green is at the bottom. So this position is what? Is short position, because short means going down, and when the market is going down, that means I'm in profit, and green represent profit. You understand? So we are shorting this position. So it's short. Let me short. To opposite direction of the order, I will not take effect. Okay, take profit. Take profit is 2.4134. Take profit. Entry is 2.5067. Take profit 2.4134. Make sure this is set at mark, not last, right? Not last. Set it as mark. 2.4 2.4134. 4134. Take profit and stop loss 2.5332. 2.5332. Right? Then let me increase my leverage. You can use 10x leverage. Then let me control more position. Right? Then short. Confirm. So let's check this order by clicking on order, then modify. You can see modify right here. Modify. So TP modify, then TP and SA right here. Click on it. right? So my expected profit now is what? 1.6 USDT, and my expected loss is what? 0.5794. You understand? So the reason why my profit is so small is because I'm controlling a smaller position. I'm just buying small USDT. You understand? So with $100 account now, with $100 account, I can control larger position. You can see this is even the actual cost. The actual cost is not up to $1. You understand? So let's say I'm controlling about 500 uh, position. Then I want to let's see if we can modify this one. 50 confirm. So modify TP or SL. Let's modify again. 200 confirm. You understand now? So I've cancelled the trade. You understand what I'm trying to explain here? The order said what? Limit order. A short position of limit order 2.5007, and we've set our the order value. Let's say out of this what? $100, I want to reach $20, which is too much, right? But let's say I want to reach $20. That's what? Since I select isolated, so this is $20. Remember, isolated, leverage. You get leverage. So I'm risking only about $20 for this trade. So after selecting my TP and FSL, what's the TP again? The TP is what? 2.4134. TP 2.4134. Then stop loss 2.5332. 2.5332. Then you can click on your short. So order has been filled. That has been filled. You can see if this trade should go in my favor, I'm making $8. If it's go the other way around, I'm losing about 2.9. You get? So that's how to place your trade. So this video is getting too long. This video is getting, and remember, your liquidation your liquidation price is here. When you click on modify, modify, I want to show you your liquidation price. Your liquidation price. Okay, the order has not yet been filled. If the order has been filled, your liquidation price will show on top here. Let me quickly let's quickly perform a market order. You see what I'm saying? But there's another way you can calculate your liquidation price. But hold on first. Hold on. Let's quickly perform a quick order, right? Can click on position, set TP and LCL. So when you come here, this is your liquidation price. It's because the market has not yet been filled. That's why our liquidation price is not visible. You understand? So let's close this one. There's another way you can calculate your liquidation price, even for a limit order. As you can see, this is a limit order. So there's another way you can calculate your liquidation price. So liquidation price equals to what? EP multiply by what? Open bracket 1 minus IM plus MM close bracket divided by what? PV. So what is LP? Liquidation price. What is EP? Entry price. What is IM? Initial margin. What is MM? Maintenance. What is PV? You have the position value. You understand? So for if you are longing a position, this is going to be what? Negative minus. But if you are shorting, this is going to be what? Positive. Don't forget. So that's how to calculate your what? Liquidation price. This is the formula for calculating your liquidation price right here. I hope you can see it. This formula right here. That's what you use to calculate your liquidation price. Now let me quickly show you how you can get this in. The first is the what? LP. Liquidation price equals to what? EP. What is EP? EP is what? Entry price. How do you get your entry price? Now if you come here, for this limit order, right? For this limit order now, your entry price. What is your entry price? What is your entry price? Your entry price is this 2.5027, right? That's your entry price. Why did they write order price? Because what? The market has not yet been filled. You understand? That's why they put order price. Assuming it has been filled now, it's going to be what? Entry price. But it has not yet been filled. That's what? Order price. It's the same thing as what? Entry price. You understand? Now the next thing is what? The next thing is what? Initial margin, IM. What is your initial margin? Initial margin is the cost. Initial margin is the cost. Initial margin is the cost, right? Total quantity, TP and SL. Initial margin. Okay, we can't see the initial margin unless the market is filled, right? So let me quickly use a market price to make an illustration. Let's put it 200. The video is getting too long. So this is our position now. Remember I said what? LP. Liquidation price equals to what? EP. What is EP? Entry price. Like I said earlier, this is the entry price, right? That's how you can get your entry price. Then the next one is what? The next one is initial margin. This is your initial margin right here. Initial margin is how much you drop for the trade. This is it right here. This is the initial margin. Initial margin is the cost 9.91. You can see here what? The quantity is what? 40. The quantity is what? The position size is 40. You get? So your initial margin is what? Is the cost, 9.91. That's how to get your initial margin. Then we have what? Maintenance margin. What is a maintenance margin? This is your maintenance margin. When you click here, you click on estimated LQ price, right? Estimated LQ price. Sorry, you click here, you click on the percentage, the values here. You click around that side. When you click around, no, not this side. You want to check the maintenance margin. No. Yeah, this is your maintenance this thing. You can see MM. You can see that's 0.7853. That's how to get your what? Maintenance margin. You get maintenance margin. So I click here, click on this 2 point something. That's how you get your what? Maintenance margin. You can see this is your maintenance margin right here, and this is the value, right? That's the value. So another thing you need is what? Your position value, right? This is your position value. This is your position value. Where is it? Sorry. Yeah, your position value is your order value right here. So that's your position value. Now, if you use this formula, you should be able to arrive at what? At this liquidation price they put here. You understand? So that will be the end for this video. Thank you for following me to the end of this lengthy video. And I will see you in the next one. Until then, take care and bye bye.